How's it going, fellow traders? It's Magic Trader here, and this is the CFTC COT report that was released July 4th, 2017. And here's the report that I created, and here's a brief overview of all the data that was recorded on that date. So let's get straight into the data. What do we see here? Let me just bring up my little tool. Where are you? Right here. And let's just line it up nicely the way I like to have it. There we go. Done. Alright. So what do we see with gold? So we hit this monthly area of supply, and so I drew in these arrows because I was under the impression that gold was going to drop down this way, simply because monthly supply is in control. When monthly supply is in control, price drops down. And so we had a tested area here of weekly demand, so I wanted to see this area break. Now long positions were being closed off with this long candle here. So long positions were being closed off and shorts were becoming aggressive, which is what we want to see if we're going to plan trades to the downside here. So closing off longs, adding shorts aggressively. Alright, take a look here. Longs are below average of 258 and shorts are above average of 94,000. And look at the coloration of the cells. Red. Alright. Let's take a look at the charts. What do we see with gold? What's been happening with gold? So price is reacting to that tested area of weekly demand, and what has been happening? It rallied into an area of supply on the daily chart and just been kind of coasting sideways and not doing anything. Okay, so it's holding. It's holding. Alright. So bearish bias, net position still in the positive, but a big decrease over the last few weeks. Take a look. We used to be at 204, 190, 150, 131, 93. So that long exposure is just dying down and dying down and dying down. We don't see any signs that price is going to be reversing anytime soon. Okay, so again, I'd be interested in taking shorts once this area here gets taken out, this area of weekly demand right here. Once that area is taken out, I'll take shorts. Until then, I won't be making any moves on gold just yet. And so we now have oil. They took off a little bit of their longs, but nothing major. And shorts, they closed off a heck of a lot of shorts. From 311,000 to 292,000, that big drop netted an increase in exposure in long positions by 1 percentage point. And net positions have increased from 327,000 to a positive 341,000. And this comes as we got this bullish candle. So things look like they're setting up to go long. But I'm not completely convinced that that's exactly what's about to happen, because I'm not liking the setups that are coming off of this zone here. So for instance, we had this trade here, triggered here, but I'm not liking how this area is tested. This isn't even a valid zone. This is a valid zone, but it didn't have a 2-to-1 move away. So I'm waiting to see if there's more build-up. Once I start to see more build-up on the daily chart, if the data continues to support a move to the upside on oil, then I will look to get in longs. But until that happens, I'm going to stay clear. Coloration of the cells, neutral. Don't do anything. US dollar, we dropped hard into a weekly demand zone, nested inside a monthly, and we see that longs are completely cooled off at this point. Alright, completely cooled off, sitting below average size. Shorts are aggressive, 24,000, so they added shorts. way above this 16.9K average. Coloration of the cells for the last 3 weeks have been bearish, but bearish sitting within demand. So to get price to drop like this, you have to be extremely bearish. Otherwise you can't get price to drop. So if I wanted to take shorts, I'd have to wait for this area to get taken out, and then I'll take shorts down here. But for now, it's not telling me to take any shorts. It's aggressive short, the bias, but that's only because they had to get price down here. I'm expecting a bounce from this area, and I'd be interested in taking longs. Once this area of supply gets taken out, I'll be interested in taking longs all the way to this area up here. Okay, so to about this area, I should say, right here. Okay, so let's go to the next one, the Aussie. And what do we see here with the Aussie? Longs were increased by a quite significant amount, 48K to 57K, as price rallied up, taking out this the supply zone here, and the shorts closed out. Okay, they've been cooled off, seriously cooled off for the last 3 weeks. Another drop from 29,000 to 25,000 in short positions. And the net effect is long exposure increases by 7 points, 70% now. Net positions increased to now a positive 32,000. So I'm interested in taking longs. I don't like the fact that this weekly demand zone did not give me a nice consolidation away. So I'm looking for confirmation trades on the way up so I can take some long positions. So waiting on the Aussie at this point. The US CAD, what are they doing? They closed off some longs from 78,000 to 73. They increased shorts from 28 to 34, and this happened as price dropped right here. Okay, so that completely makes sense. So that drop happened because they closed a lot of longs and because they added some shorts, but it seems like closing of the longs was the bigger move. Net effect is a long exposure drops from 73% to 68%, and the net positions also dropped from positive 49,000 to positive 39,000, so that's a significant move. So as I was expecting, I have the arrows here. I'm expecting price to drop down here. So this data is a good representation of what I was expecting to happen. Once we get down to these lows here, I'll be looking for signs of them adding their longs again so I can get in long. US Swiss, what do we see here? We see that longs closed out by about 4K. Shorts closed out by just by like, how much is that? By about 300 positions. Not big, but we're at 50-50 right now. So I'm not making any moves. I'm going to wait to see what the US dollar is about to do, and then if this displays some good setups, then I'll take them. But right now, this is not an ideal chart to trade. So we move on to the next one, the euro, and the euro's been rallying quite hard. Created a monthly demand zone down here, and we also have a weekly one right here. Long exposure increases and holds its aggressive tone. Shorts close out by 120 to 208,000 with this big rally. So this big rally comes as shorts are closed out and as longs are being added to. And net effect is long exposure jumps up 3 points from 60 to 63%. And take a look at that. Okay, net positions positive 58K to positive 77K. So very strong bullish bias on the euro. Okay, so let's look at the pound. The pound increases in longs from 43K to 54K. Shorts pretty much remain the same. Net effect is the long exposure drops, or increases I should say, to 5 points from 35% to 40%. Shorts drop from 65 to 60, so becomes slightly a bearish or bullish move, I should say, as the coloration of the cells slightly turn green. But I'm waiting for some good trade setups off of this area here, or waiting for this area to be taken out before I go longs. US dollar, Japanese yen, what do we see? We see longs increasing from 99,000 to 118,000, which is pretty huge. And that happens as we get this ERC candle here. And shorts increase from 38 to 43 as price increases. And net effect is long exposure jumps up 1 point to 73%. Net positions increase from 61 to positive 75K. So it's a bullish bias, but not within these areas of supply. Okay. If price drops down, we get some nice setups, then I'll take longs. But as long as this data supports it, but not right now. The Kiwi dollar. What do we see with the Kiwi dollar? Long still aggressive, but no big shift in positions. Shorts become even less cooled off from 19,000 to 15,000. This happens as this candle here rallies. Okay. And what do we see? Net positions, they have gone up 4,000. So net positions have gone up 4,000 from positive 25K to positive 29K. Colorations of the cells are bullish, but again, we needed them to be bullish. We needed a bullish maneuver from the institutions to get price all the way up here. We're sitting within supply, so I'm not taking any longs. So I'm expecting price to drop further down. We had the Canadian rate release today, and they remain. Let me see. Let's see, what was their verdict? Previous was 5, consensus was 75. They increased rates. Okay, they increased rates to 0.75. All right, and that's why you see the Canadian dollar getting stronger, dropping hard. Well, it also dropped because we had arrows here, the magic arrows. Right, they've been there for weeks. How do we know? Well, because when you understand supply and demand, you know exactly what price is going to pretty much do. Drop down like that. And that's exactly what happened. And then we have the rate release to come out, make the currency stronger, which is an added bonus. But from here, I'm expecting to take longs. And the currency is going to get weak again. And that's pretty much it. So hope you liked the video. Hope it helps you with your trading. And we'll see you next time.